That's really three completely different types of investments. So I don't know, the first thing that springs to my mind is, there are such three different types of investments. What would you say to the average Kiwi coming along, who's just got their Kiwi saver kind of thing? How would you encourage them to consider such very diverse investments and, some quite risky, let's face it?
It's a really good question. I want to start if that's all right. And so what I think the great thing is here about our marketplace here in New Zealand is that we are seeing a real maturity and evolution, and that's come off the back of 18 years now of KiwiSaver. Like, I think back to 2007 when KiwiSaver launched, and New Zealanders had very little understanding of managed funds investments outside of property, term deposits, and finance companies back then, which you know the story about that. So I think what we're seeing now is that the introduction of a lot of these new products are fantastic, because it's forcing us to grow a greater understanding and knowledge around what we should be considering and how we should be involved in. For us here at PiFunds, our own KiwiSaver proposition, we've got a small exposure to Bitcoin. We've also got private equity, which is a different asset class again. And so I think the great thing that we're seeing is that the diversification piece, the involvement of these new asset classes is only going to benefit us as Kiwis as we continue to grow our understanding of markets. Just look across the ditch at what compulsory super's done to Australia over the last 20, 30 years, and that's the journey that we're on. And I think these alternative asset classes will play a key role in us in getting to that sort of point.
Yeah, no, I'm happy to jump in. Because we touched on this briefly last night. As an outsider moving into New Zealand, it's pretty interesting to see how obsessed with property everybody is, and I can't understand sometimes the lack of education that's coming and helping people to get somewhere with learning about different classes of things, because it's sort of seen over here that property is really simple, but I noticed in your presentation earlier you quit your job to write a book on how to buy a property, which to me suggests it's not that simple. And having done it and gone through the process and dealt with the admin, it sincerely is not that simple. And the amount of moving parts, I had a buyer's agent dealing with a seller's agent, and then they had to get a valuer in, and then they do a mortgage broker, and it goes on and on and on. And you realise whenever you speak to a first home buyer or any home buyer, but ideally a first home buyer, nobody gets pre-approval and then goes off, sees a house, buys it. There's a fall through, they go to an auction, they get outbid, and it goes on. It's a difficult thing. And when you put the time, effort, and energy into learning about that, why can't you learn about anything else? Because it's not that complex. It's not beyond the average Kiwi. It's something that they could teach in middle school maths, but they don't. And they don't do it in the UK either. And it's a frustrating thing. Because, I didn't know about this 2.5 years ago, and now I'm possibly the most active trader I know. Like at any given point, I've got 10, 15 contracts out there, and if my parents had hold of this, I say not parents, my dad had hold of this, when he was a kid, I might have been a trust fund baby, god damn it, but I'm not, and it's frustrating. So yeah, I just think it's a situation where we've become hyper-focused on property, and it's not sustainable, and the reality is like, that property market, the real hero, the only hero really in that game is the mortgage broker. I don't understand what the real estate agent does. The person who gets the finance over the line, they've won the game for everybody, because at that point, people have got that pre-approval and they're walking around with a loaded gun. They'll shoot anything they can. So the real estate agent here is an incredible fiasco to me. Any estate agents in? Fantastic. Let's slide them. Quote me. Yeah, so I just think it's just a situation whereby there's no reason we can't educate ourselves more, and everybody here, we're all learning about different things, and everybody's saying we should take the time.
What do you think, Simon?
Couldn't agree with both of those, more with both of those comments. Let's just make sure that was in there. But you did ask about the average Kiwi, and if I was to put the words Bitcoin, diversification, asset class in front of the average Kiwi, and believe me, I speak to the average Kiwi daily, it wouldn't land. It just simply wouldn't, right? So all it comes back to, in my opinion, and the comments are correct, it's great to have diversification within a KiwiSaver portfolio. It's bloody awesome to be able to invest in Kiwi companies, right, and not have to stick to the listed market. It's awesome to have something counter-cyclical like crypto in there. But what I've just said to you guys, you might click, might drop for you, but you're the few. The many are the ones that are really left behind by us not being able to fill in from the bottom up instead of from the top down like we're doing at the moment. So some of the changes that have come through in the new KiwiSaver policy, which no doubt there'll be a question about in the next little while, so I might be jumping ahead, I'm sorry, and I'm not very good with the mic either. So apologies for taking it to and from my mouth. The sooner we can get the education done, the better, and the earlier we can get the education done, the better. And what that does mean for my generation, for the generation above me and the generation above that, it does mean a bit of sacrifice. And when it comes down to property and Kiwis, fixation on property, it's because, from my point of view, it's easy to understand. It's a house, you live in it. It's real, it's tangible.
Follow-up question actually from the Slido. Why are no KiwiSaver providers offering Bitcoin? I'll come to you in a second, Paul, but do you want to have a crack at that, Simon?
I can have a crack at it. It might be an interesting answer, and some people might disagree with it. So some KiwiSaver providers are offering Bitcoin, number one, within an ETF, within a traded fund, so wrapped into something that is more manageable than holding the asset directly. There are a number in this room actually, I believe. So that's there. Whether it belongs in a KiwiSaver portfolio or not, that's up for question. And that's the beauty of the end of my speech where I said there's 30 plus different options up there. If you understand what Bitcoin is, how it works, and the risks associated with it, by all means, there's an option for you for your KiwiSaver to have it.
Paul, do you want to jump in? Because as you say, crypto's always had this, not very good reputation. How do you sell it to the average Kiwi as something they should have in their portfolio?
With tenacity. It did have a perception problem. I think that's largely going away. When you've got the largest fund managers in the world who are literally backing it and selling it to their high net worth clients and all that sort of stuff, I think that those days are done. There are several of KiwiSaver providers who've been brave enough to include it. When we say put a portion of your portfolio towards Bitcoin, we would say somewhere in the 2 to 5% range to do that, because that's the maximum risk reward for a portfolio, and it works really well in that regard. And as a diversifier, you get upsides gains, you get all that sort of stuff. When we don't have to. When people come to us at Easy Crypto, they're converted. Like they're there. There's people in this room who have been in Bitcoin since 2016. They are up 100x. They don't fucking care what you think. Just to put it out there, they really don't. They're in, and there is a surprising amount of Kiwis who are in that position, and they don't need convincing. There are. Like I said, there is a new cohort of people coming through who are going, I can't scrape together $200,000 as a deposit on a house. How am I going to get ahead? From my point of view, I want my children and the rest of us to start investing in productive assets that are going to grow this economy and get us out of this funk and GDP and all of that stuff. And it's not selling houses to each other. But we have to get beyond that. So, word of mouth, keeping at it, educating people about the returns, counter-cyclical, Sharpe ratio, all of the stuff that comes with it, and do some research.
Just changing tack for a moment, something we were also talking about last night. Simon, you talked about the difference between responsible and ethical investing. Would you like to just give us the elevator pitch on that?
Yep, I can make that really quick. So, responsible investing looks at risk, right? So it's looking at an ESG score. Does everyone know what ESG means? I'm going to go for it. Looks like it'll look at an ESG score and make a judgment based on risk. So, for example, let's use fossil fuel extraction. There's a finite amount in the world. Governments are moving away from it. It's ignore Taco for a second. And the risk there is that because it's a sunset industry, it's disappearing. Financially, it's not worth investing in. But they're using ESG metrics to assess that risk. Whereas an ethical investor would also use the ESG metrics. They'd also look at the financial side, but they'd overlay it with the values-based judgment call, which is, we don't believe it's the right thing to do because it's harmful to the environment.
I'm cribbing madly from the conversation we had last night, which was really interesting over a couple of wines. Martin, on the subject of responsibility, you were talking about how something like 25% of your Kiwi business is now options trading, but you do feel you have some responsibilities to kind of like save people from themselves. What do you do in a situation where you see someone behaving recklessly?
Yeah, cancel their account. So there are safeguards in place for people that are, just a full disclosure, Tiger Trade offers a margin facility, which means you can borrow against the positions that you have, sometimes up to 4 times the amount you've got in there. Now, we had an interesting conversation in the office at one point where we're explaining to an intern that if someone's got $1 million in their account and the market drops 5% and they lose $50,000 in an hour, that is a remarkably different scenario, galactically different scenario, to somebody who puts $50,000 in and makes a whole heap of nonsensical trades and loses $50,000 in an hour. Now, somebody who's on the trajectory of that manner, then we have a responsibility to save them from themselves in that situation. And the reason behind it, we may never find out. That's just, we don't know this individual, but we would take that action for them.
Bouncing around a wee bit here, but just going to one of the Slido questions. I'm not sure who's best to answer this, but why would I buy crypto and not an ETF? Anybody?
Comes down to your tax position and how you think about that, and your technical willingness to either hold your own asset or you're more comfortable with buying it through a wrapped package on a Sharesies app or through a KiwiSaver or something like that. So when you're buying the ETF, you're subject to a FIF, and that means when it gets over $50,000, you've got to pay tax whether it goes up or down. When you own crypto natively, you have to deduct the gain from, if you have a gain from the buy price, and pay your marginal tax rate on that. Your tax rate on that.
Technical reasons.
Yeah, pretty much. Yeah.
Right, there's even other ways to jump into that though, right? It's not either a direct holding or an ETF. Say for example with Pathfinder, we looked at Easy Crypto, and what were you guys on? Was it icehouse that did the raise? Yeah, so we bought in as part of our KiwiSaver portfolio. We bought into the actual company, so private equity holding, and as James mentioned, Pi and Sharesies do a fantastic job of that as well. And I think I read this morning that Fisher Funds has just released 300 million of their portfolio to private equity in New Zealand too. So you're seeing the impact I was talking about here, slowly starting to trickle down. It'd be lovely if the banks joined, or if everyone just moved from the banks. Sorry to the banks.
More general question here, again from Slido. What's the biggest misconception you encounter about investing? Do you want to start, James?
Men are better investors than women. Like honestly, and then my wife, it's taken me a long time to learn this, but my wife will say to me, if we're going for a walk and she's chatting away and she's talking about her day, and I'm sort of going, okay, you need answers, I'm going to provide a solution. She's like, no James, I just want to be heard. I don't need you trying to fix it, right? And I think when you think about markets, when markets are going backwards, us males have a tendency to go, heck, I've got to do something, I've got to fix it, this is not the way it's meant to be. And that's completely the wrong behaviour, generally. Whereas I think about most of our female clients, they're outstanding because they just don't engage in that kind of behaviour. They just ride through the different seasons, and the evidence suggests that that's how you make more money over time. You don't try and time markets. So that would be mine.
Martin?
Touching on that actually, very interesting sort of stat. Our biggest competitor completely books the trend, and they're very female heavy. The whole industry is very male heavy, which in that scenario, it suggests that everybody's got the marketing wrong. So we might have to have a chat with the marketing club on that one. Because if the biggest company or the most clients here have got mostly females, and then the whole industry got mostly males, we've all got it wrong. But I think the biggest misconception I get is that it's complex and that it's gambling. And really, you can set things up to really minimise risk and play the game. And if you really want to have a punt, you can. But it's not just a gamble. It's crazy talking.
Simon, what do you think?
But before I answer, we're 70-30 skewed female male.
That's interesting.
Yeah, relatively proud of that, and not surprised to start with. It would be lovely to see it a little bit more equitable. But biggest misconception, let me bring that back to Pathfinder, because I'd like to talk Pathfinder, I love Pathfinder. Let's say the biggest misconception of ethical investing, right? Our investment team wear shoes into the office. Although they may hug the odd tree on the weekend, they don't have dreadlocks. And the real biggest misconception is that to be ethical is a black and white decision. It's a black and white, you're either ethical or you're not. Everyone in this room here is ethical just in their own way. And I think that gets in the way of people adopting values-based investing a lot. Because they think, oh, I look after my children well, I volunteer for charity, but I put back 2 bottles of wine on the weekend and, stayed up until, 4 a.m. sweat and, said a bad word or two. It's very much not. It's a spectrum, and everyone sits on it, and I think that's the biggest misconception from my side.
What's your view, Paul?
I've got 2. So I think a lot of people out there hold the view that investing is only for rich people, and my hope is that with low entry fees on our products and others that can change. And the second one is I can never learn that. It's a reserve of certain people, and I just think that it's so sad that they feel that way, because then they're just literally self-selecting themselves out of a future. And I think we as a nation have to really fix that and get our financial literacy and way up to get beyond this place. Yeah.
That's a great discussion, guys. Thank you very much. Could we have a round of applause for our panel?